Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. My name is Lars Fontin. Once a week, same time, same place. Let's do some cycle analysis. I hope you're doing well. Yeah, the wave is on. Today, I want to talk about, or at least an update about, Bitcoin. Cycles and cryptocurrencies are often requested, so today is the day. Let's have a look at Bitcoin cycles. What we're doing here is we use digital signal processing, if you're new to this channel, to detect possible dynamic time-based cycles in different data classes and assets. So, nice to see you also live. Thanks for joining me, Arun. And as said, we are live today, so feel free to drop in your questions so that at least during the session or at the end of the session, I will pay some attention to it. So, starting with Bitcoin, the starting point for every cycle analysis in that regard, I would recommend maybe look back to the blog article I did here on this blog. You will find it at last.cycles.org. So this is my blog at the Foundation. I think that's a free article anyhow, and it's from January this year. It was also part of the financial summit we did at the Foundation, and it was part of a question on Bitcoin cycles. And just the reason why I'm repeating this analysis is there is a long-term, not only a cycle, but also a cyclic pattern in a Bitcoin cycle. So it's a very long article with a lot of research which has gone into it. But I will just come to the final conclusion, and I want to update you on that conclusion. So this was the summary in January. It seems to be an interesting point in time for the next 2 to 3 months to move into Bitcoin until May this year, before we expect the next important long-term upswing. Yeah, so this is what we said in January, a good time to position long into Bitcoin. Yeah, that was the point as Bitcoin traded around 16,000 US dollars. I mean, we know it has more or less doubled. But that's not the point for today. The important aspect I highlighted in that article, and this is what I wanted to update today now, is there is a count of 5 and a count of 3 in a Bitcoin cycle with a nominal length of around 200 days. That's the important finding of the research I did on Bitcoin. And please check out the article for the underlying research results. The count of 5 always detects a major high. And the count of 3 is, looking at past instances, then always the count where the bottom beyond the past major high is to be expected. So the last major high was here at between 60 to 70,000 back in October, November 2021. And then the nominal 200-day cycle needs to be counted by the repetition of the third expected bottom, 1, 2, 3, which was then this year in April. That was the reason why I told already in January that this is now the final point in time to position maybe long in Bitcoin again. And we arrived exactly at this projected timing period back from January, and I want to update this cycle projection here together with you based on latest data. So referring just to that article to get a baseline for what I'm doing here, let's now jump into the current Bitcoin cycle. Therefore, let's switch to our cycle analyzer. Let's load Bitcoin to the chart and let's have a joint look at Bitcoin. Yeah, this is for sure. Let's use the daily. I don't want to use, that's the daily Bitcoin data. That's where we did the analysis back here in January, trading at 16 something. That's the point in time where I said now it's the period which could be interesting to position for a long move. We doubled since then, and now let's see what the cycles tell us based on the current condition. Yeah, first this is the basic screen, how it would look like if you start your cycle analysis. This is not a long-term analysis, so I'm just using the current path with around 900 data points. I often try to repeat why I'm just using this length around 900 data points, because we are interested in the most recent phase of this cycle and the projection into the future. We are not interested in averaging a cycle over a huge amount of historical data. The historical analysis was already done, so therefore please check out the article. So I know which cycle I'm looking for, and I know from these long-term analysis which cycles have been there in the past and which not. Yeah, so for sure you need to do your long-term historical analysis. But as this is already done, we're just looking at the current point in time and want to find the cycle which is most valid for current projection. So therefore we look into the spectrum, which we find here down below. That's the spectrum, and there's clear one cycle which stands out of all other cycles at the current length of 180. Oops, let me check this here. 186 days. So I would assume, and we can confirm, that this is the so-called 200 days nominal cycle. Yeah, and you know that due to the variation of cycles, the cycle length will never be static. So the cycle length shifts, and based on this shift, in today's environment, the nominal cycle with a length of 200 days is currently 186 days, which is an acceptable variation for the cycle length. Yeah, so we see it in the spectrum. Just analyzing current data, the nominal cycle of around 200 days is not only there, it's also the most dominant cycle, from that analysis. Also, if you look at the AI-guided ranking system we have implemented, this is the first ranked dominant cycle for that asset class here. So 186. So there's really clear objective approach. Selecting this cycle now, which then also reveals the current phase of the cycle. Just the spectrum does not give us the phase. The spectrum gives us the length. But when we activate the cycle to show as an overlay, we see the current phase of this dominant cycle now on the chart. So let's reveal where we are in this cycle here. So that's the key top we are referring, or the count we are looking to, October, November 2021. The major high we have seen in Bitcoin. And anyhow, this high was the count of 5. So this was to be expected, a major top in Bitcoin. And then the count of 3 of this nominal 200-day cycle applies, which gives us the count, or I can even bring the count in. So this is the top, and then we come to 1, 2, 3. Yeah, that's it. So here we would expect a major bottom from this top here. That was the count of 5, 1, 2, 3. So this is where we are now, since January. So we see that based on the analysis in January, we would have expected this low to arrive in April. We now see that it seems to be a left translation of the cycle, or the cycle shortened a little bit. So it seems like we have already passed this possible low. And that's why I always said in January already, that's the time you can now start to move long. So that's the key point where the next long-term upswing will start. Yeah, that's based on the article and the analysis I did in the past here. So that's just looking at the single cycle, knowing that at this point in time here, it looks like we have now passed the major bottom based on previous patterns of that cycle. And that's now also interesting, not only that this is a long-term projection here, starting at this low. So I'm not really surprised that this cycle will not now come to another low in this markets, because we have passed the point in time here already. So this might just become a sideways movement. Yeah, we need to wait from this top now to this low here. And then the short-term cycle points again in the direction with the long-term cycle, which has rolled over here. So the long-term cycle is already showing upwards, as I tried just to draw, maybe not beauty, but here, that's the long-term cycle count of 3, which ended here. Now we needed to wait until the 200-day cycle has finished the upswing here. Now seems to have finished the downward phase, which might then lead to this sideways movement, but is now coming to an end. That's why also was stated more or less in January already. So now after the period of May, after we have passed the point of 3 here, it would become really interesting now to see a long-term recovery in Bitcoin. So that's what the cycles more or less still confirm what we did in January. So we are right on track. I would call it right on track for the $1 million question, which I gave you the indication in January. This is the updated analysis on the daily cycle. It looks like still a valid path to move further for possible new tops in Bitcoin. But cyclic analysis, pure timing analysis, no price analysis, no environment, no additional conditions taken into account. The pure dynamic time cycle analysis, what we did here. Yeah, pure education, pure scientific cycle analysis, nothing more, nothing less. Take this into account and make your risk assessment if you want to use this kind of timing information. Yeah, that's it for today. Quick, right to the point, 10 minutes Bitcoin cycles. You asked for it in the previous sessions. I did a lot of stock market cycle updates. So today I wanted to give you, often there's not much to tell, but at least a reconfirmation of the analysis. Yeah, we did already in the January session. So that's why I maybe often do not repeat the asset class if there's not something new. But I think today's session gives you at least validation for the cycle analysis. And by the way, that's the basic procedure we're doing here again and again. So I try to repeat a real mechanic procedure, how to use cycle analysis for your environment. And in the end, it doesn't matter which software you use. This is what we at the foundation at least offer our members. There are for sure other ways to detect cycles out there. You just need to understand and know how to use this information. So that's what this channel is about. Okay, now let me try to dedicate some time to your questions. Yeah, Edward, I see your questions. So let's spend some time. I think, Edward, you are today here, but that's the bonus of being live for sure. So let's spend some time. This section is now more for members using the software. So I see your questions are related to also what we're using here. So Edward, profile, what's the difference of NCNF and Fit making composite under the hood? Please kindly explain. Yeah, that's correct. So this question is related to some features we have in the application, how to generate composite cycle projections into the future. And there are different settings to apply that. So let's just use it here on this Bitcoin chart. So you are referring to the channels advanced, or let me even zoom in, auto composite here. And if you activate auto composite, it will give you first the so-called nominal nearest cycle nominal fit model, which allows you to define a cycle length period. So this was used to for example, that's the Hurst model. So you can define the length in days according to a fixed cycle length set. And the NCNF model means it will now search for the best fit of real cycles found by the spectrum, which come most close to the nominal model you applied here in the settings. So it's now a best of breed that you don't use fixed cycle length, which the nominal model gives you, but it will use the nominal model to look for the cycles which would fulfill the criteria of this nominal model. So by using that, let me select now the Auto NCNF feature here, where you can see now it selects 3 cycles, 186, 22, and 90. And these are the nearest fit cycles related to the nominal model we just entered into that section. By the way, you kind of see that the most dominant cycle is the 186, but this is now a composite model. And you can recap here. So the advanced session is the 188, was set as nominal cycle. That's the reason the 186 was picked. Then 94 was also given as a fixed cycle length. I think that's the reason the 90 was selected. And then we had 24, and the nominal model gave the preset of 23. So it uses the real detected cycles based on the cycle scanner, and then only selects the cycles which are closest to the nominal cycle model. So you define the nominal cycle model, which gives you more flexibility than just the Hurst cycles. So the dynamic cycles selected based on the most closest fit to the Hurst cycles model, which you can change or adjust in the settings panel. So that's the NCNF. The fit is a different algorithm. So there's a second possible selection of how to, let's clear it up first, how to generate a composite cycle model. The fit model now has nothing to do with what I just explained. This is around the best fit of cycles if you would have traded these composite cycles. So the fit model really analyzes all possible combination of detected cycles, just simulates a trading approach, and then select the cycles which have resulted in the best trading model from the past using these cycles. So based on the fit approach, these 5 cycles now have been selected by that algorithm, which just based on pure backtesting from the found cycles. So it's not using any additional cycles. So it just checks all possible combinations. So you could imagine out of these, I think 20 cycles which have been detected here, there is millions of possible cycle combinations you could use to build a composite model. But the computer is now doing the job for you. It tries all possible combination out of these cycles and then comes up with a model based on the past data from the back testing has resulted in the best trading strategy. So that's where we are. So yeah, that's just explaining, Edward, how or what the difference is between these auto composite models. For all the other colleagues, maybe just new here in that session. Oh my God, I'm clicking too much here. What I used in the beginning of this video is the so-called most dominant dynamic cycle. So just using the one most prominent cycle in the analysis. For sure, more complex cycle analysis then will result in using dynamic dominant composite cycle models, which means we use more than just one cycle. Yeah, and you could have your own knowledge how to pick the right cycles, or we could ask the computer also to do the auto selection of which cycles, and these are two possible approaches which we have built into the platform. Yes, Edward, and I hope that also answers the question why these two approaches generate totally different projections. Correct, because they are just based on two different assumptions. Yeah, maybe, Edward, also to your question, dominant peak finder and classification, the principle, and how does it affect or impact the settings of these two auto settings. So first, let's pay attention to the peak finder classification, which is new, which is the ranking here at the right-hand side. So that's a different way identifying the most dominant cycles out of a spectrum. That's the purpose of the dominant peak finder. It's a mixture of different rating algorithms to judge if a cycle from a spectrum here is valid or not. Yeah. So for example, let's use this example here. Here we have a peak in the spectrum, right? So just from a mathematical point of view, we have a peak in the spectrum at that given point here with a length of 282 days. But this peak in the spectrum does not really look as a valid cycle to use. So for our left-hand side, yeah, I would expect it to fall more to the low point here, so we don't have a sharp separation to the left, to the right. The amplitude is very close, yeah, from the epsilon axis here to that level. So also the separation of the amplitude is not as high. So this is not a clean, valid peak here. So that's more preferred than that one here. But that's the visual shape, yeah, how you read from a visual perspective, how the spectrum is visually designed. Mathematically, there is a peak. It's also a very flat plateau here. So it's not a clear spike in the spectrum. It's a very flat plateauish peak. So by explaining that, that's what the dominant peak finder will take into account, all these different criteria. And it will rate and judge and rank all possible peaks here according to these different criteria, and then come up with a ranking algorithm where on the top of this ranking, so the first ranked score, fulfills most of these visual statistical criteria you would have to select a cycle from a spectrum, which gives a kind of a guidance, yeah? So kind of artificial intelligence which guides you in front of the spectrum which one to pick out of these possible ones which are shown in the spectrum. You know that Bartle score, strength are additional measurements, but it's not as easy just to follow one measure. So the peak finder classification takes different possible criteria into account and comes up with a rating. But this has nothing to do with backtesting, curve fitting, whatsoever. So it's just a dynamically or a relative algorithm score which just compares different cycles from the spectrum based on visual shape, based on statistical criteria, which could be different from spectrum to spectrum. So therefore it's not a fixed if this then that algorithm. It's also learning, self-improving, and different from spectrum. So said that, using just the AI finder would come up with two possible cycles in that spectrum. And this has nothing to do with the nearest nominal cycle fit model, yeah, which just tries to fit the found cycles according to a nominal model. That's more just the pure Hurst approach. The second, the fit model, was just backtesting which combination out of cycles gives the best backtesting results. And the third method now with the AI is just looking into the spectrum and just judging from that point of the spectrum, these are the most valid cycles. And then you could build a third composite, which could become just the third option in this selection here, where you just pick cycle number 1 and cycle number 2, which is then just using the 2 dominant cycles which have the most prominent outcome of that classification. So I hope, Edward, thanks for raising these questions. They are quite important if you're dealing with these different composite models. And I hope I tried to explain you the reasoning and the background, what's the difference between these. At least now you have 3 procedures to automatically pick a composite model, but based on different underlying assumptions. Okay, so maybe, Edward, a follow-up question. So I have to pre-select my initial cycles before calling? No, you don't need to select any cycles upfront. The only thing you need to adjust is in the settings what nominal cycle you want to have the nearest fit to look against. So it's not the selection of cycles. It is more about what nominal model you are looking into. And so these numbers, this is what you can change or just use the fixed setting. But this is just the Hurst cycles converted into trading days, so that it in the standard setup just looks for the Hurst daily cycles model. But you can change it to whatever numbers you want your nominal model to fit in, but nothing to do with the pre-selection. Edward, thanks for being live here. I think that's the purpose of the session, and that's also the benefit. I would invite all of you to join, to at least get a chance to reach out and have your questions answered live and interactive. That's for today. I wanted to keep it short. First section, Bitcoin cycle update, daily analysis. Please also reach out to the article from January, still valid. Very interesting period ahead of us for crypto and Bitcoin in specific, based on the cyclic pattern. We have the 180-something daily cycle now active. You know that you can use this information to fine-tune your technical indicators. So use around 90 days to tweak your technical indicators on your technical chart, or maybe 45 to 4th, so a harmonic relation. So at least that's what you can use and take on your trading chart. Please let me know about your questions, and I would like to see you again here on the channel next week, Monday, same place, same time, cycle analysis. So have a safe week and see you next time. Bye.